Well, I think the broader question here is why is independence important, not why is independence important at a particular point in time. We're talking about structural independence of the Fed, not independence based on a time and place. And I think independence of the Fed is important because we believe, or at least, and certainly academics have shown through their research, implicitly that the White House and the executive branch have a different reaction function than the Federal Reserve. In other words, the White House tends to put more emphasis on what the electorate wants to see in the short term, especially in key election years, let's say. And the premise here is that the White House's reaction function, if it's driven by what the electorate want, is going to put more weight on driving growth, on reducing unemployment, and on keeping mortgage yields low, more so than it would worry about inflation. The Fed, on the other hand, has a dual mandate, which is much more balanced, which is much more symmetric. In fact, that's encoded in the law, that it should pertain to looking at unemployment and inflation without a bias, the way that the White House might have. That's the key behind the need to preserve independence, because if you believe that inflation should be a weighty matter for policymakers, then let's keep the White House away from policy.
And Alexis, dragging it from 1951 to 2026, so much of this is still about coming off the pandemic. And where are we coming off of COVID?
Yeah, I mean, I think that's a great question. And now, of course, we're looking at a new year with a new Fed chairman going to take over, whoever that might be, come May 15th. I'm wondering if Powell will be inclined to want to stay on it in any capacity after what's happened now, because he's able to, legally stay on.
That's correct.
Not as chairman, but as a board member.
That's absolutely right.
Do you think it may behoove him to do so?
I think it might. I think that would simply open him up a little bit more to legal recriminations from the White House. So that's a decision that he's going to have to take, whether he wants to take that risk. I would say that simply going on the public record over the weekend with the comments he made displays a huge amount of courageousness, because effectively what he's doing is tempting this White House, and that takes some temerity, that takes some courage. So let's hand it to him. He's not backing down right now, and to the extent that you should respect someone who has that kind of courageousness, this is a good thing.
Yeah. What about what this all means for the bond market, for the dollar? I mean, we are seeing some reaction. I argue not as much as I would have imagined when I saw this news come over my Bloomberg over the weekend.
Well, one reason we're not seeing that much of a reaction is because this is just the latest step in an arc of events. We kind of knew already that President Trump wanted to get rid of Jay Powell. We kind of knew that he wanted to exert his influence on the Federal Reserve structurally. So this is just another tool that's come out of the tool chest, but it's not a different approach, effectively, or a different goal. I think in that respect, the market was already starting to acclimate to the prospect. Remember also, this doesn't necessarily change who's going to be the Federal Reserve chairman going forward, right? We kind of knew, as you mentioned, that Jay Powell was on the way out. So in that respect, things haven't changed. But at least the direction of the market makes sense, right? For bond yields at the back end of the curve to move higher makes a lot of sense if you in a world that's going to be structurally more inflationary.
Good morning across the nation. On YouTube, subscribe to Bloomberg Podcast. Can't say enough about that experiment. Really humbled by the continued growth we see on YouTube. To give you the field of play here, in about 20 minutes, John Farrow in conversation with Bill Pulte. This is the grandson of the Pulte Housing founder. He's chairman of the Federal Housing Finance Committee. He'll be front and center. We're going to talk more about that interview with Michael McKee and Terry Weissman with us here in a bit. Kelsey Barrow on the bond market coming up as well with JP Morgan. Dr. Weissman, what kind of economy right now does President Trump enjoy? Over the weekend, I was flabbergasted by the 12-month 2025 sum of a dearth of job formation. I mean, is this basically, in foreign events as well, a distraction from a really ugly economy?
I don't think the premise of your question, I think, Tom, is a bit off. I don't think this is an abjectly poor economy. There are certain things in the economy that are actually going quite well, and I would point to productivity growth as one of those things that's going fantastically well, as judged by the numbers that have come out. And growth itself on the back of that has been strong, despite the fact that we are not seeing much job growth. On the matter of job growth itself, there are a few reasons why we can ascertain that this is not about a demand deficiency. This slowdown in hiring is not about a demand deficiency. It could be simply because some new entrants into the labor force, college students, are simply not being hired enough. It could be the result of some policy uncertainty, but it doesn't seem to be as grave as to warrant a worry about a recession coming up.
What about the biggest headwind that you see for this economy in this new year?
Well, it's the same headwind that I perceived last year, and I think it's still a valid headwind, but whether it's going to be enough to offset the good things is hard to say at this point. We suspect it won't be. But that issue, that pessimism, if there should be any, derives from what's happening with the low-income consumer, the low-income household. Is he sufficiently burdened, or he or she sufficiently burdened by debt and by a real wage that has not been growing, to really start to suppress the amount of spending that household does? We suspect that they could, but not enough to offset, again, the other components of spending that we expect to be strong.
Again, that K-shaped economy.
If you want to put it that way, I don't particularly like that expression, but it's important to keep in mind that the high-income household has been responsible for an ever-growing share of consumption in the economy. And the economy, as a result, depends more on what the high-income household is doing.
At 14 minutes after the hour, at 44 minutes after the hour, we note to our audience worldwide that I have the plague.
Which is why we're in this small room together.
I know, it's hermetically sealed. Thierry's on the other side of the cone of silence here. I got what everybody else has, folks. Good luck with it. Get a flu shot, talk to your doctors, and don't have a fever, and don't show up for work if you think you're contagious.
It's tough out there. And now there's a nurses' strike on top of it all here in New York City.
This is the first big challenge for the mayor.
Yeah.
Let's vamp on that to Terry Weissman. We can do that. Terry, let's do an audible. McKee's going to sit down wearing his Denver Broncos tie today. Dr. Weissman, just as simple as I can, the wage angst that's out there is tangible. Is a nurses' strike something to look forward to for all of this year, labor unrest?
Look, I would suggest or submit that it's more important than, say, the workers at Starbucks going on strike. I think this is a question of degree. Nurses and what they do are critical, not just to patients, but to the economy overall. And I think, Tom, you just mentioned exactly why. If people get sick, they don't show up to work. If people don't show up to work, nothing gets done. So that's why a nurses' strike is pertinent. Now, of course, this is a localized one. It only is going to happen in New York City. But more generally speaking, you don't want to see healthcare workers unable to do their job. We know what happened during COVID. It was a disaster in that respect.
Yeah, well, thank you. This is what we do, folks. This is the way we roll together. Michael McKee driving all of our economics, and Terry Weissman of Macquarie with us today. Mike, Glenn Thrush and Colby Smith in the New York Times say there's a legal thing with Mr. Pulte here of pushing these things, and then the courts just push it aside. Do you anticipate with your reading this morning that the courts will push aside this criminal threat to the chairman?
I am not going to hazard a guess on that, but we can point to the track record of the administration, and that is trying to indict James Comey, trying to indict Letitia James, and failing in both cases multiple times. So I don't know if they will go ahead with this. If you are to believe the president, he didn't know anything about it, which is what he said last night, then you could imagine him telling Jeanine Pirro to back off and drop this investigation, because it's not going to go well for the administration here, and it isn't. It makes no sense. I don't see what the end game, what the president gets out of this. The
number one interview for Bloomberg last year was John Farrow with Scott Bessent. It was viral in the zeitgeist for 3 weeks. This morning I have Bessent's silence. Are people like Bessent and even Secretary Lutnick saying to the president, you got to be kidding me, yield up, price down? Mike, is that what's going to happen?
Well, we are hearing that a number of administration officials, and I don't know if Scott Bessent is among them, were caught off sides by this, did not know that this was happening. And it certainly could be a case of Pirro going rogue on her own, a little bit of the old, will no one rid me of this meddlesome priest kind of thing, taking the president's anger at Powell and running with it. But you're right, it doesn't do him any good, because at this point the markets are reacting negatively. Now there's so many other things that can go wrong in the next hour, let alone the next week. But it is not something that is going to play out well for them, particularly with Tom Tillis saying he won't vote for anybody because he's a Republican on the banking committee, split 13-11 between Republicans and Democrats. You lose one Republican and you can't get a nomination through for chair. So this isn't, it probably isn't playing out the way you would have drawn it up if you were trying to do a conspiracy theory.
So is this really, in essence, a criminal investigation about how taxpayer money is being spent? Is that what the DOJ is looking into here?
Well, what we've been told is, yes, it's a criminal investigation. It is into whether Powell lied to Congress about these renovations. It is not a lawsuit that Trump was threatening. Nobody knows how he would do it for malfeasance or for not managing the project well. But Powell's going to be out of office as chair in 4 months, and this might just stiffen his spine and lead him to stay on as governor, which he can do until 2028. Do
we need more dissent, Dr. Weissman? I mean, I know you studied. I'm so sorry, I can't remember who you took your PhD with at Harvard. But if it's Benjamin Friedman or Kenneth Rogoff, the late Marty Feldstein, I mean, there was a collegiality to this. Do we need more dissent at the Fed?
I think we do, but I don't want to express it in terms of dissent. A range of opinions is always healthy. I think that's the way I would put it. Having opinions from other business leaders from other regions. I mean, the reason the Federal Reserve was structured as it was, with this emphasis on a broad regional basis for decision making, speaks to the need to have a diverse view of opinions. So I think that's good. Dissent in and of itself, to the extent that it's taking the economy in the wrong direction, of course, is not good. But a multiple of views is a good thing.